The Pi Network is a groundbreaking cryptocurrency project that aims to revolutionize how people interact with digital money. It's designed to make digital currency accessible to everyone, not just tech experts or those with expensive hardware. Unlike Bitcoin and other traditional cryptocurrencies, you don't need powerful, energy-hungry computers. Just a regular mobile phone is enough to participate. Users mine Pi coins simply by opening the app each day and tapping a button, making the process incredibly easy, energy efficient, and accessible for people everywhere. This unique approach has attracted millions of users from all over the world, with the goal of creating a digital currency that truly belongs to everyday people, not just a select few. Pi's mobile mining and low barrier to entry have helped it build one of the largest and most active communities in the entire crypto space. For several years, users could only accumulate Pi within the app, unable to trade, sell, or use it outside the network, which led to growing curiosity and excitement. This created a sense of anticipation and speculation about what Pi's future value might be once it became tradable. The project started with a long testing phase, during which the team refined its technology and listened closely to feedback from its growing community. The ultimate goal has always been to launch a mainnet, where Pi coins would finally have real-world value and practical utility for users everywhere. This extended development period has tested the patience and dedication of its massive user base, who have been waiting for years to see Pi's true potential. Now, with the long-awaited mainnet launch, Pi is finally transitioning from a closed experiment to a tradable asset with real possibilities. The world is watching closely to see if Pi can truly deliver on its promise of becoming an accessible, everyday digital currency for people everywhere. The launch of Pi's open mainnet in February 2025 was a turning point. The blockchain went live, enabling real transactions and opening the network to external developers. This shift allowed for the creation of dApps. Over 25 were live by May 2025, giving Pi real utility. Users could finally activate wallets and make their first real transactions. The open mainnet marked Pi's move from a closed system to a vibrant, accessible ecosystem. However, launching a mainnet is just the start. The technology must prove secure and scalable. The development team now faces the challenge of maintaining and upgrading the blockchain. For millions of users, this was the first real test of Pi's value in the open market. The transition brings both new opportunities and risks as Pi steps into the broader crypto world. The ecosystem's growth will determine Pi's long-term success. All eyes are on how Pi adapts to the demands of a live, open blockchain. Pi's greatest strength is its massive global user base, a truly unique phenomenon in the world of digital currencies. By May 2025, the Pi network had grown to over 60 million users, making it one of the largest crypto communities ever assembled. The simple mobile mining concept brought in people from nearly every country, many of whom were completely new to the world of crypto and digital assets. To ensure network integrity and security, users must complete KYC verification, a crucial step for building trust and preventing fraud. So far, about 19 million users have successfully completed this process, helping to legitimize the network. This verification is essential for moving mined Pi to the mainnet and enabling users to trade or use their coins in real-world transactions. The engaged community creates a powerful network effect, making Pi more valuable as more people join and interact within the ecosystem. Developers and businesses have instant access to millions of potential users, opening up new opportunities for apps, services, and partnerships. However, managing such a large and diverse community is challenging, with high expectations, cultural differences, and years of anticipation. The core team must balance rapid tech development with clear, transparent communication to keep the community engaged and informed. As Pi enters the open market, the community's unity and resilience will be tested by price swings, speculation, and new economic realities. The future of Pi depends on how well it can harness and sustain this massive user base, turning enthusiasm into lasting value. The next phase will reveal if Pi's community can turn its enormous potential into real-world adoption, shaping the future of digital currency together. For years, Pi coins couldn't be traded on public exchanges. They existed only within the app, leaving early adopters with little more than a digital balance and hope for future value. As of March 2026, Pi is available for spot trading on some exchanges like OKX and BitJet, but not on giants like Binance or Coinbase. These listings mark a turning point, but they're still limited in scope and reach. A major milestone came in May 2025, when Kraken launched Pi Perpetual Futures, offering a public price signal for the first time and allowing traders to speculate on Pi's value. However, futures trading is different from spot trading. Traders bet on price movements, not the actual coin. This means most people still can't buy or sell real Pi tokens on open markets. Pi miners still can't deposit their coins directly onto Kraken. The coins mined in the app remain locked, unable to be transferred or sold on these platforms. This creates confusion. Pi has market interest, but lacks widespread liquidity and access on top-tier platforms. Many users are left wondering when, or if, true open trading will arrive. The absence of spot listings on major exchanges is a significant hurdle for mainstream adoption. Without these, Pi remains on the sidelines of the broader crypto ecosystem. Without these listings, liquidity remains low, making it hard for users to trade Pi easily. This limits both price discovery and the ability for holders to realize any gains. Many holders are still waiting for a secure, reliable way to sell their coins. For now, most can only watch and wait as the ecosystem slowly evolves. The current landscape is a mix of progress and ongoing limitations. While there's excitement about Pi's potential, uncertainty still clouds its path to mainstream acceptance. The next big step is achieving listings on major, regulated exchanges, an essential move if Pi is to become a truly global, accessible cryptocurrency. Rumors of a Binance or Kraken spot listing have fueled excitement in the Pi community. A Binance listing would be a game changer, exposing Pi to millions of new investors and boosting liquidity. In March 2026, Kraken added Pi to its asset listing roadmap, a strong signal, but not a guarantee. A spot listing on Kraken would provide a secure venue for users to buy and sell real Pi coins. However, major exchanges have strict review processes, focusing on technology, security, and decentralization. Reports suggest Binance's review has slowed due to concerns over Pi's leadership and centralization. Until official announcements are made, all rumors should be treated with caution. The crypto space is full of speculation. Only confirmed listings matter. The community continues to wait, hoping Pi can meet the high standards required for top-tier exchanges. A major listing would mark a new era for Pi, but it's not guaranteed. Listing on regulated exchanges like Kraken or Binance signals trust and legitimacy. These platforms follow strict rules for security, transparency, and customer protection. Assets listed here have passed rigorous vetting, giving users confidence. Security is a major benefit. Regulated exchanges use advanced measures to protect funds. For most users, holding assets on these platforms is safer than managing private keys alone. Spot listings provide transparent, open markets where prices reflect real supply and demand. This transparency helps prevent manipulation and builds long-term trust. Liquidity is another key advantage. Major exchanges connect Pi to a global pool of buyers and sellers. High liquidity means stable prices and easier trading for everyone. A spot listing would transform Pi's market, making it safer and more accessible. Until then, users should be cautious and prioritize security. Despite its growth, Pi faces serious concerns about transparency and decentralization. In May 2025, reports of insider selling 12 million Pi tokens triggered a 50% price crash. Such incidents damage trust and raise questions about leadership's intentions. Centralization is another major issue. The core team reportedly controls about 60% of all Pi tokens. This concentration gives a small group outsized power over the network and its economy. Validator nodes are also heavily concentrated in Vietnam, posing operational risks. These factors make major exchanges hesitant to list Pi for spot trading. To gain mainstream acceptance, Pi must address token distribution and decentralized governance. Greater transparency and distributed control are essential for building lasting trust. The project's future depends on resolving these core issues. Trading Pi coin comes with unique risks, especially with the introduction of perpetual futures on Kraken. Futures trading allows leverage, amplifying both gains and losses, making it risky for beginners. Aggressive short selling can increase volatility and drive prices down. Low liquidity is another problem. Trading volume dropped over 60% from recent highs. In low liquidity markets, prices can swing wildly, and large trades can cause slippage. Pi's price has seen dramatic swings from $1.60 to $0.13 in less than a year. This environment is dangerous for inexperienced investors. Anyone trading Pi should understand it's highly speculative and only invest what they can afford to lose. Extreme caution is advised until the market matures. If you're interested in trading Pi, prioritize security and patience. Wait for spot listings on major, regulated exchanges for the safest trading environment. Avoid smaller, unregulated platforms that may lack proper security. Educate yourself about crypto risks. Prices can swing dramatically. Start small and never invest more than you can afford to lose. Use strong passwords and enable two-factor authentication on all accounts. Be skeptical of anyone promising guaranteed returns or asking for private keys. Follow official announcements and avoid hype-driven decisions. Demand transparency from the Pi team, especially regarding token distribution and decentralization. The future of Pi depends on overcoming its challenges. Trade carefully and stay informed.